This is my favorite investing portfolio. Every time I open up my M1 portfolio, my M1 passive income portfolio, I just start to smile, man. I don't know. I just start, there's just a smile on my face. I don't care if it's up. I don't care if it's down. Every time I open up this portfolio, I'm just like, yeah. This is the way we invest. This is literally the easiest investing strategy that you can possibly have, which is simply dollar cost averaging into great businesses over time. Dollar cost averaging into businesses that you see a great potential with over time. If we look at the holdings within this portfolio, it is literally just some of good, strong businesses, at least in my opinion. We have Apple, literally the greatest consumer business that has ever been established. The way they're able to get people to continue to buy their products year over year over year by finding new and intuitive ways to integrate all these products together to make people have such a difficult time switching to any other product is just amazing. We have Intel, which it can be questionable, but they're turning things around. We'll talk more about Intel here in a second. We have Microsoft, which is just my baby. Y'all know how much I love Microsoft. It is the greatest business to business that is out there. How many times am I gonna say business in this video? But I love Microsoft and I love the moves that they're making. I love how they continue to buy businesses in order for them to expand and to grow. And it's not just like they're buying random businesses. They're buying businesses to make sure that the core thing that Windows does and the core thing that Microsoft does, which is working with enterprises, continue to do well. I mean, the other day they announced that they were buying a cybersecurity company because they want to make sure that they are the one-stop solution for all software needs from any business. And then we have Disney. Ooh! The brand power of Disney is just too good. Do you know a child that does not want to go to Disney World? Do you know a child that does not like Mickey Mouse? In fact, as a matter of fact, right now it's all about Moana. Right now, actually, that's wrong. It's all about Encanto. Man, if you haven't seen Encanto, you need to go check out Encanto because that movie is really good. This is something that Disney does with their ownership in Pixar. They just keep coming out with the hits. And we have Disney Plus. My goodness. Anyway, that's Disney. Then we have Bank of America. It's boring, but it's a good bank. It's an okay bank. I mean, I bought this thing because I was following Warren Buffett and I bought into it during the pandemic and I was like, this could be a good return. And I had a pretty good return. And then we have this cash holding over here, which is the JEPI equity premium holding. Is just a hold. Like I just have that in there just to put cash because I want to be earning dividends as I put cash. And then we have what I think might be the greatest idea of a business in the history of business, which is Costco. People be sleeping on Costco, my friends. People just don't know or understand. Actually, that's a lie because Costco trades at a crazy premium. I mean, right now, the PE ratio for Costco is like 40 something, which is in the same level as like Microsoft. So people know about Costco. Costco is one of those businesses that whether it's a recession, whether it's a people gonna go to Costco. Costco it does such a good job for its customers. So I love me some Costco. But anyway, these are the businesses that I like. It's very simple. Like every single one of these businesses, I can understand them. I like listening to them. I like learning about how they operate. I like learning about their numbers. This is why I have these businesses in my portfolio, which makes it a lot easier for me to sleep at night, even when the stock market is doing what the stock market likes to do, which is decline. And right now, the stock market year to date is almost in a correction territory. As a matter of fact, it is in a correction territory, which a correction is just a fancy word of we've lost more than 10% in a year. And it's going to continue to decline, in my opinion, because of everything that's going on in Ukraine. But regardless, for me in this portfolio, all I want to do is own good businesses. And right now, as you guys have noticed, the holdings has whittled down. I mean, at one point we had over like 20 companies in here. That has been whittled down all the way down to 7 positions, with which we can't really count this JEPI one as a position because it's really just a cash holding that I just like collecting dividends. I just didn't want my cash to just be sitting. I wanted to be collecting dividends with the money. And so JEPI is a holding that I have in there. And so whenever there's a decline in the market, I'm going to sell out of this and that money is going to go to one of these different companies. But the point is, these are companies that I don't have to worry about too much. I can just keep dollar cost averaging into them. And it's just like, I put money in, we buy good companies. I put money in, we buy good companies, which is another reason why I love the M1 Finance platform. But regardless, like I said, this is why I love this portfolio. And on top of everything, your boy getting them dividends. It making me feel so good. If we look at my activities for the month, we'll see like I got paid 3 times in dividend. I got paid by Jeppy. I got paid by Apple. And I got paid by Costco. It may not seem like much. I mean, Apple only paid me $1.90. It's not like the craziest thing. Jeppy paid me $2.16 and Costco paid me 36 cents. It's not the craziest thing. It's not the most amazing thing. I mean, total, that's like what, $4 that I made in the last month from dividends. But at the same time, it just makes me feel good. Like, you know what? I'm a partner in this business, not really a partner, but I'm a part of this business, and this business has to pay me some money to be a part of it. But if we look at what I've done in the portfolio over the last month, I sold out completely from store capital. I got out of store capital. I was like, I'm no longer in store capital. I don't know nothing about rental. I don't really care too much about rental. I made a little bit of money in it, but I was like, you know what? Let me just get completely out of it and put that money into things that I actually want to be buying. And I bought 2 things, and I've been buying 2 things consistently. I bought a little bit more in Disney because it's been on a decline. And I was like, you know what? I want to own more of Disney, even though some people will say like Disney is still too expensive, especially it's not really making any profits, which it's back to being profitable now. But I just see like the future is so bright for Disney. Every week at the office, people are like, oh yeah, I just bought some tickets to go to Disney World, to take my kids to Disney World. Everybody is going to Disney World. Disney Plus continues to grow. I mean, I just talked about Encanto, and then we have the whole Marvel universe that continues to grow, and I'm loving it. And as a matter of fact, Disney just announced a new tier of their streaming services, an ad-supported tier for their streaming service. Yeah, later this year, Disney is going to introduce an ad-supported plan, which will be cheaper in order to get more people on subscribe to the service. The other thing is everybody sleeps on Hulu. Hulu is a really good service. I wonder how that's going to finally play out with Hulu and Disney Plus and ESPN Plus. So there's a lot of future going on with Disney. That's why I keep buying into Disney. The other company that I've been buying into in the month of February was Intel. Intel, I have just been dollar cost averaging, and it has grown to be my 2nd largest holding in this account. Unlike Apple, which is my largest holding, that has grown into the position of being my largest holding, mainly because of the gains that I've had on Apple, Intel is the one that I've grown into being my largest holding by literally putting more and more and more money into Intel. I mean, I'm down 11% in my Intel position, and I continue to buy into Intel because I just see like the manufacturing prowess, especially as the world continues to do less globalization and people realize like, oh my gosh, we are heavily reliant on Taiwan. We're heavily reliant on China. We're heavily reliant on all these other places to manufacture all these important things for our businesses and our companies. We need that thing to be brought back in state. Intel is one of those companies that I just continue to put in my holding, and I continue to dollar cost average into, as they even just announced another large fabrication in Ohio, and they're going to spend another $20 billion to build that thing out. So for me, Intel is a large play for me going into the future, and I just continue to dollar cost average into it. And it's nice. It's nice to dollar cost average into a business that continues to pay you dividends. As a matter of fact, if we look at my activities for this month, Intel just paid me a dividend of about $9.27, which is the highest dividend that I've ever gotten from any company. But as I continue to own more of Intel when it's depressed right now, I'm hoping that it starts to give me them recoveries over the long run. But anyway, that is the entire portfolio. If we took a look at my dividends that I've earned in the month, we can see like this month I've earned $4.42 in dividends. And that's going to continue to grow. And you can see the trend line of how this thing is going over time. You can see it started off with me just earning 11 cents in dividend. And that has grown over time to now be the highest month was in December when I earned $11.57. And then this month is $4.42. And that's just going to continue to trend upwards and higher. And if anything happens in the market, you know your boy going to be active and buying a bunch more stocks. But that's where we are right now. We can see the change over month. If you compare my February of 2020 to my February of 2021, it is moving in the very great positive direction. And so that's the thing, consistency. When it comes to investing, it's not a one-time thing. It's a consistent thing. It's something you have to do each and every single day. Something where you have to put some money into it every single month, every single week. Whatever your consistency is for you to do it all the time. And if you're not somebody who wants to pick stocks, all you have to do is just invest in ETFs or index funds and just let that thing grow in the background. But anyway, that's all I got for y'all. I hope y'all learned one, maybe 2 things out of this entire thing. And if you did, hit that like button. If you loved it, hit the subscribe button. But I'm gonna catch y'all up on the next one. Remember, generosity is always greater than greed. God bless each and every single one of y'all. And y'all boy is out of here. Peace, and please stay safe. Whoosh.